Joe Sibilia, CEO of CSRwire, the leading source of corporate social responsibility and sustainability news, reports, events, and information. This year, we're pleased to join our colleagues at SRI in the Rockies to produce the 2010 Speaker Interview Series. Today, we have the pleasure of speaking with Michael Jantzi, who will be a speaker at the 21st Annual SRI in the Rockies Conference on November 20th of this year. Michael Jantzi is CEO of Sustainalytics, operating in North America as Jantzi Sustainalytics, and the founder of Jantzi Research Inc. He has played a crucial role in the development of the responsible investment market through the creation of essential environmental, social, and governance research services. Mr. Jantzi writes frequently for publications throughout the globe and co-authored the 50 Best Ethical Stocks for Canadians, High Value Investing. In June 2010, he was presented the inaugural SRI Lifetime Achievement Award by the Social Investment Organization of Canada for its contributions to the development of the sector and creation of innovative research practices and products. Well, Michael, thank you very much for joining us today.
Oh, it's my pleasure.
As a leader in ESG research, tell us what kind of progress do you think has been happening on this front as new and emerging stock exchange requires reporting on ESG information?
Well, for me, the time frame is just over 20 years, so I think we've seen tremendous progress. And I think the most essential thing for me is that we've seen ESG, or socially responsible investing, becoming mainstream. When I started out in this business, it was almost squarely in the domain of values-based investors, faith-based investors, environmental groups, labor unions, and the like, who have always wanted to get a competitive bottom-line return, but wanted to do that within some sort of either individual value set or organizational mission. We've seen it move quite aggressively in the last 5 years to the point now where, if you look globally, which is really where we do our work at Sustainalytics, you're seeing an increasing number of significant asset owners, pension plans, sovereign wealth funds, and so on, looking at environmental and social governance issues, integrating them in across a number of different asset classes because they believe that it makes them better investors, and in fact that their fiduciary responsibility really compels them to look at these types of things.
Well, in terms of portfolio performance, what effects are the recent reporting social metrics having on portfolio performance? Are you seeing a connection?
Yeah, I mean, I think that the data overwhelmingly demonstrates the fact that you can integrate environmental social governance issues into portfolios and achieve very competitive bottom line returns. And the interesting thing to us is that maybe traditionally the focus has been on equities as an asset class, but we're seeing very clearly a very strong link, a strong business case, if you will, between the integration of ESG and good performance in a range of asset classes like real estate. So very clearly, mainstream investors now who are looking at real estate portfolios will say, well, we have to evaluate environmental risks. If we don't, it's just not smart investing over the long term. We're starting to see very strong business case emerge for looking at these issues in infrastructure investing and private equity or venture capital investing.
What are some of the new tools that you're using to assess the environmental health and safety risks with some of the companies and indices that you're researching?
I think one of the things that is really important from a sell-side research perspective, and looking at these issues from that angle, is that more indicators does not equal better analysis. So what we're really trying to do is focus on those key performance indicators that we think are critical in analyzing a company's health with respect to environmental, social, and governance issues.
When you look at the consolidation of research firms, and you're one of them, and some have described you as the Peter Kinder of Canada, tell us what effects you think we can expect from the consolidation of these research firms. Is that an opportunity or a challenge going forward?
Well, from my perspective as a CEO of a global ESG research firm, we see it as a tremendous opportunity, of course. And in fact, Sustainalytics is in and of itself the result of a merger of 4 regional players. And I think in this world where clients, asset owners, mutual funds, and so on are demanding global coverage, it was going to become increasingly difficult for regional players to compete and provide the quality of research and analysis that the market is now demanding. So I think for a firm like ours, Sustainalytics, which is deeply rooted in the industry and understands values-based investors and the needs of that particular market segment, but at the same time bringing experience with mainstream investors and helping them integrate environmental, social governance issues into their models in a fiduciary framework. It's a great opportunity for us.
Well, I noticed something interesting on your website in regards to controversial weapons radar, and one of the lines you discussed that you want to initiate ongoing dialogue with companies that have these controversial weapons. Why would you even have a dialogue with them when it seems counterintuitive to even research or have them in someone else's portfolio?
Well, the controversial weapons radar that we have was a product that actually started in Europe, in fact, in the Dutch market, and we've had cases where head office had no idea that a far-flung subsidiary halfway around the world was involved in this, and at the end of the day, we've seen instances where they've taken action subsequent to the conversations that we've had with them.
One more before we have to adjourn, and that's the Jantzi Social Index. Tell us about how it's going and as it expanded beyond the 60 companies. Give us a little bit of your take on what's happening there.
Yeah, well, the Jantzi Social Index is a social index which was built to highlight the performance of leaders in the ESG side of things in the Canadian market. And when I started the business, it was a Canadian-focused market. You described me as being the Peter Kinder of Canada, which I take as a very nice compliment. But the Jantzi Social Index has been in place since January 1st of 2000. It includes 60 Canadian companies that, again, are leaders on the ESG front in the Canadian market. And it's performed very nicely, thank you very much, over that time period. So it's one of the pieces of the puzzle that, again, highlights the fact that companies that are integrating ESG into their business models can perform very nicely for investors. And what we say part of the puzzle is says investors can have their cake and eat it too.
That's great. Well, thank you very much, Michael, for your time today. I look forward to seeing you at SRI in the Rockies in San Antonio in November. You've been listening to Michael Jantzi, CEO of Sustainalytics. Michael will be a featured speaker at the 21st Annual SRI in the Rockies Conference. Today's interview is brought to you by First Affirmative Financial Network, producer of SRI in the Rockies, in collaboration with CSRwire.com. This is Joe Sibilia. Thank you for listening.